Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Tuesday, the 16th of February, 2021, and we're just about 6:20 p.m. Central Time. Interesting day. By the way, tomorrow I get my second COVID shot, so it'll be interesting to see how I feel off of that, but I'll feel better in getting it. Mixed day. You can see GME fell down again. You were pretty stable in AMC. The get high stock, THCX, where we saw a correction hit last week, you're getting a little bit of a bounce today. As we look at some of the others, the metals, pretty ugly. Gold still acting absolutely terrible on the charts. And interest rates keep climbing. A sort of mixed day if we look at QQQ, SPY, and DIA. But let's go to PAVE. PAVE might be running into the point where now you're right up against these old highs. 23, you missed it, you got to his day, 22.86, you're right into this key resistance. Don't be surprised after a vertical price rise that markets want to back off from that. Could easily happen. The pattern is still bullish with higher lows, higher high. Take out 22.13, you break that pattern. Where's the market in terms of moving averages? Well, the support's 21.94. The negative of that is to get back to what I call that line in the sand, you'd have to break through the last break low. So that would give you a higher high, lower low pattern into where that support might be uncovered. You've gotten nowhere near that upper Bollinger Band. You know, it's still 20 cents away. So when I say nowhere, it's only 20 cents away from a move that I started bringing this back on because I saw this generates this power back here. What about momentum? Overbought. So ripe for a correction to a degree. Is the Biden administration going to get rid of infrastructure? Well, not yet, but they're also not going to make it number one. They got to get their COVID relief bill passed. That's number one for them. And that'll be a lot of talk as things go on. As we take a look at THCX, I really should take this red line and put it up here. Because now what you really have is a lower low, higher high, and now with this bounce back into an uptrend. So a lot of things on this chart aren't jiving. Momentum is pointing down. The bias is up, and the more I'm looking at this, actually I take this red line, put it here. I've got a pattern of higher lows and higher highs. It is in an uptrend on swing lines, not so in the momentum here. You had an embedded reading. Let's take a look together at something. Where we embedded here, both numbers on this day are over 80. The day before, over 80. Day one of embedding, day two, day three. What is the rule if you lose with the red line closing back under 80? Just the way it did here. The odds favor that price and the 18-day average are going to make a run at each other. This market closed far and away under that 80 level, so even today it couldn't recover it on the bounce. There's today's action. You're at a 56 reading going nowhere. I would not be surprised to see those two come together, which if they do, ends the uptrend. So that leg of the upside ended. And now the market's got to figure out what next because of momentum, and assuming that you take out this 21, what was this low? 21.48. So if that happens, that's where it's at. At a minimum, you've already, it's amazing how fast it did it. You're no longer even in overbought territory. So you have a market that I'm going to argue is still in an uptrend until 21.48 is taken out, momentum down, bias still to the upside. Didn't want to spend that much time on it, but it's a confusing chart. SMH. You're riding the upper Bollinger Band. We know about the shortage that's going on in semiconductors. So this is a case in which the fundamentals led the move, not the chart action. The fundamentals, the shortage, with people saying something's got to be done. You're overbought. 3 days hitting the upper Bollinger Band. I think the pros are coming out, not into the market. And I think they'll buy it again on a pullback if it embeds. In the XLI, well, we look here to see what do we have. Let's get back to the numbers where they start. On this day, both numbers were not over 80. That was Wednesday. They were both over 80 on Thursday. They were both over 80 on Friday. And today they're both over it. So welcome to the embedded club. Until the red line closes back under 80 on pullbacks here, I say the pros are buying, still looking for the 91.54 zone. I say they bail on their long positions if that red line closes under, let's give it some room, 79. XLE, what do you think you do on the first time you hit an upper Bollinger Band? I know you're going to tell me, Ira, this thing has room to run, the weather, blah, blah. Okay, enjoy yourself. I say that the first time you hit an embedded band, especially one that's not even embedded yet, the pros are taking money off the table. They'll take another look if it embeds. Otherwise, they might just go, okay, we got a nice one there. QQQ could not quite make it up to the upper Bollinger Band. It still has the swing line up, but that's not what's dictating the action. It's this: when you have an embedded reading, when the slow stochastic converts from being overbought to locking in with both numbers staying, the K and the D lines over 80, until that's lost, and it'll be the red line that loses it first. Until it's lost, I say that the pros are going to buy on the pullbacks. They'll bail when lost. In the EFA, the emerging market, well, did we embed now? We certainly have both numbers over 80 on Tuesday. Both numbers were over 80 on Friday. All I need is Thursday, and I got it. The day before they weren't, you can see. I knew that. So now that you're embedded up to the top number, what do I think they did first? You hit the upper Bollinger Band. I don't care if you embedded. That's where money comes off the table. With the embedding, I think they start a new buying program on the pullback in the market. In my morning ETF spider video, I give you a moving average that I think is the one that they'll buy at. So you have to be a subscriber to see that, and I really go over that in great detail. GLD, what do you think? I think the pros are going to do the first time you hit a Bollinger Band. So long, had a great time with you, and that's where I think they take money off the table. They did it back there. You don't stay down under that band very long. So, you can play it all you want, it's going to collapse. I'll let other traders do that. I play what I call the higher percentage plays, that it's not going to do those things. That does not mean it's turning bullish, but that's where I think money comes off the table. In GDX, momentum turned down, so that gives me bearishness there. Bias is down, but I'm not in a trend. I have a higher high, lower low, and I'm starting to develop just plain sideways action of no follow through. Okay, I can recognize that. I'll back away because there's no trade set up. TLT, let's go back to Friday. You did not hit the Bollinger Band. So you had that rally in an embedded condition. What do I tell you? When you get an embedded condition, you're not looking at swing lines anymore. It's the embedded part that takes over. Again, I'm doing that enhanced course. I start the actual, I've done a bunch of go-through recordings. I'm hoping I don't have more go-throughs, but I start recording tomorrow. The PowerPoints are done, and it's going to be broken down into 5 chapters. I already know how the whole course is going. And there'll be the first, the buy without an embedded, and what you do with the Bollinger Band with an embedded, what you do with the Bollinger Band, the sell conditions, what do you do without and with. And then there'll be another course with all the tricks of the embedded slow stochastic. These are the tricks of the Bollinger Band with it. So I'm looking at it come down. Okay, what if it hits it today? What do you think I'd be telling my clients on the phone? I know you're going to tell me it's going to keep going. I'm telling you the percentage play is you're not in one of these narrow areas you're coming through. It's wider. It could, and you could be very right, take something off the table is what I would have said. In FXE, you have a battleground without a trend. You still got the lower highs, lower lows. You're trying to stay over the 18-day average. You're not going anywhere yet. You frankly, if you get under 113.33, reinstate the downtrend. You would then have lower highs, a lower low, an overbought condition, momentum down, and you could be arguing maybe you're going back to that 112.50 area. Converse, let's flip it. You get over 113.93, I'd have higher lows, higher highs. I'm looking for the upper Bollinger Band, but I don't think I'm going to attract a lot of the traders because I'm already in overbought territory. But that would still turn a bullish situation. So you put it together, you try to come up with game plans, and that is the name of trading. Trading isn't easy. You always have to be thinking ahead to the next step. If you're just reacting to what's going on, that's not a game plan. A game plan does not mean you're going to win. A game plan means you keep your risk under control with things you can control. You couldn't control what Mother Nature did, for example, going down to Texas and this type of freeze that I don't think they've ever had anything like it. But you knew the cold weather was coming and you could protect yourself. Got the difference? So there's degrees that you do there. With all the reflation that you're hearing, are you up on it? Are you the markets that it might impact? You know, we are commodity brokers. You're in our backyard. This is a big, big reflation time. And we've already seen the copper market go up dramatically. We're at a 6-year high in the platinum market. You know the stock market just keeps going. Where the currency is going to play into this. And what about those raw commodities you hear so much about, be it the energies and what else? Well, this is what we do. So if you haven't seen the kind of reports we write, and we write them all day long, with graphs, ideas, option strategies, can you apply it to your ETF thinking? Oh yeah. Oh yeah, I'm showing certain ETFs that rely right on this. What about the meats? Do you honestly think in these financial markets, silver doesn't move without it? Big report today, reading on BlackRock with the silver ETF, SLV, that they may not be able to issue enough new shares to meet demand, another form of a squeeze, if they can't get access to the markets without making them crazy. I can't believe they couldn't buy silver futures left and right. Would they drive prices up? Oh yeah. But another thing, we talk about all that. That's my point. How do you get this? It's really simple. All you need to do is give us a call or go on our website at www.iraepstein.com. We'll set you up with a trial so that you can see what we do. We don't want to bury you in information. You can even tell us the subject areas you want to see, and you won't get market reports on things like milk that you may not want to see at all. Got it? That's all you need to do. I'm Ira. You have a good day. I'll see you tomorrow.